Hey, what's up, everybody? All right, this is Chef again, and I want to create a little small watch list for the week, and I'm going to try to keep it as simple as I potentially can this week, only because it's a 4-day week and there's not a lot going on. But we do have the results of the previous 2 weeks here and the stuff that we talked about here, with the pattern playing out right here, which was the head and shoulders pattern. All right, so the head and shoulders pattern is already playing out, and it's already creating this one now. If you guys don't know what this head and shoulders pattern really is and what it does, usually it comes back down to the bottom. Now, I'm not here to tell you guys that we're going to come way down here, but if we do, then I hope you guys make money on the way down. But do keep in mind that we're already trending to the downside. We already started off with a nice red candle for the week. We're at 44.80 right now, and the trend is being respected, right? So either way, no matter what happens, you still got to be ready for both sides. And how we're going to come into this week and where we're going to go long, where we're going to go short, it's going to depend on the smaller time frames. And I don't think we're going to have this huge move. We may get like another huge wick, whether it's going to be on the top or bottom. I don't know what it's going to do. But usually in the 4 days, there's usually small amounts of volume and not a lot of crazy volatility. But the moves intraday are a little bit more aggressive, and they do cause some good up and down movements to give you guys and provide you guys some great opportunity to short and long at the same time. But either way, I am going to be focusing on dip buys this week, and I'm going to give you some great levels to look at, right? So /ES, either way, again, we're going to go long over 45.34, right? And we're going to stay shorts as long as this thing is under 45, all right? So anything over that 45 right here, just this level alone, above this blue line, 45.35, and then 45, that 45 is going to be short. So I'm using 45, the actual numbers of 45.10, right here, 45.10, and following this trend to the downside. So basically what I mean here, that as long as we're below this specific blue line, we are still bearish short term, whatever the trend is to the downside. Once this thing starts to crack above, then that's when we'll go long and start looking at the market in a bullish perspective. So if this does not play out this week, then we're still going to be looking to short anything to the downside. Where we're going to go short at, where it's going to confirm even more shorts, is going to continue. So you start trailing your position once you start going below 45, which we're at 45.80. So I want to use the previous candle body, which is your 44.82. And it's kind of like where we're at right now, okay? The next piece, you're just going to use this wick right here. Keep it very simple, because if you extend this piece to the side, let me show you. Look where it lands. It lands at a previous area where it was resistance, and then it became supports, right? And then this whole area was fought as well, and then this became demand, and then this was tested, so that became demand as well. So we're kind of just stuck in between. We're stuck in between a demand and a very huge supply. Whether or not we're going to hold here or not, it's this week is going to determine. It's only 4 days, guys, so it's got to be very, very simple, right? So anything below 44.80, 45, and 44.40, what is this, 44.43, is going to continue to the short side, okay? Very simple levels here that you need, and the sentiment, keep it that way, okay? Either way, I am still going to go look for dip buys in the markets, because there is a lot of opportunity that is being offered, and I see some great opportunity for some good tickers to show some type of reverse, right? So this is /ES. I'm gonna leave NQ and RTY to you guys, but hold on, I really like this RTY. All right, so RTY has a lot of value because of earnings coming up. Earnings are going to be kicking off, and I believe it's JPM this week that has earnings. Let's double check. Yes, it is. So on 4/13, in 3 days, basically, this thing is going to have earnings. So financials are going to move, and we got to keep watch on these, right? So RTY. What I like about this is the candle bodies are right here real tight at 1956 to that 1980 level. So kind of where we closed at. So anywhere below these levels is going to be shorts. I want to see if we hold down at this bottom. If we do come down to this 19, that's where I will look to dip buy if we do hit that level by the end of the week. If we don't, either way, I'm going to look for a dip buy anywhere inside here because I like the financials. I don't know what it's going to come out when the earnings are going to, pop off. It's either we're gonna hold or we're gonna, come rocking on down, whatever it is, whatever comes first. That's the side that we're gonna go on. So if I do buy the dip anywhere in here, I have to know that it's going to be a very simple strategy to switch sides, stop out on my calls, and then get into puts and ride it all the way to the downside. RTY likes to trade sideways a lot. So if this can become a sideways right here, if this can become a sideways range, just like we did over here, then it's going to build the same characteristics as it did in the past. The only thing now it's just beginning to be a little bit smaller. And if we can identify that now, then it's going to be very easy to trade in the upcoming weeks. Every time we come down here, ride calls all the way up. Every time we come up, ride puts all the way down. So just like this happened with RTY, and it has a lot of great value. Okay. So for the first ticker that I have on my watch list is going to be PayPal. And if you guys don't know, I will be keeping alerts on this until this thing hits all-time highs. This thing is at a great level down here at this 100 level for PayPal stock. So if this thing can hit, 310, maybe in 2 years or so, I want to be able to catch the whole ride up and take full advantage. So buying leaps, buying swings, buying shares, buying intraday day trades and scalps and all that. I want to be able to take full advantage of something like this, whether it's going to go up or down. So I want to show you the 4 hour. And I like the 4 hour. The cool thing about PayPal is that it's under the financials now. It's under XLF. So the sentiment is going to come from that specific sector now. And it's going to move one or the other. And since these have earnings, I think PayPal might be a little off. But it's going to correlate with that ETF in that sector, which is going to give it that much strength or that much weakness, whatever comes first. And so this is going to be something new for PayPal, that the movement is going to be characterized by this new setting that it's in. So hopefully that makes sense. But anyways, this piece right here was supply. We broke above for the first time above supply. We came in here for 2 days, created a double bottom and created demand. So we retested from the top and we bounced. So identifying that specific level, 112.30, is a important level to look at. And then the bottom of the base, we are at the bottom now. So anything below 110.30 or just psychologically 110, I do not want calls. If it breaks 110, we're going down into this next piece that can drop all the way to this like 105, 106, and what is about 107.60. Just this little piece here. Okay. But I'm kind of leaning bullish. But again, doesn't have to go. We don't have to go long. This thing can crack down the rest of the week, and it can, next 4 days do something like this. So PayPal is going to be a nice, great dip buy here. Or if we get stopped out, it's short all the way back down to the downside. Okay. Very simple setup here, right, for PayPal. The next one that I have eyes on is Disney. Disney is a slow mover, guys. So if you're looking into getting into some swings, I think this is a good one to practice on because it does challenge your emotions and it tests your patience because you got to be very, very patient for something like this. All right. So let me just take this off. So down here, there was a lot of buyers. There was a lot of orders that were being filled here. And then now we're finally creating some type of base here. Okay, this little base here. So it's all getting bought up here, got bought up here. All these buyers coming in. So I want to be able to buy it anywhere between 130 and 130, 150, where it's at right now. Continuation will be around 133 psychologically, and then 135 is going to be one of my first targets. And then the top looking for 140. That's how simple I'm going to keep it for a potential swing. I wanted to do something like this. And the buy level is here. Okay. So keep this very simple. This is a buy anywhere in here. Stop loss between anything below 120, 129.30. I do not want anything below 129.30. Other than that, I am looking to buy Disney and hold some swing plays for the next 2 to 3 weeks at least, if we continue bullish for Disney, right? Again, it all depends on the market, guys. I'm not telling you that even in the red market, you're going to start buying these dips. No, it's actually a very simple game plan because one, if you know it's at demand, you can buy it. Two, if you know it's at demand and demand is breaking, you stop loss on your call position and you automatically switch to a put position knowing that that demand just broke. So it gives you the perfect setup, because if you buy here, stop loss is here, that's your entry for put side. Okay, it keeps things so simple where you don't really have to think twice about cutting your position or re-entering a new position, because it's all right here in one setting, right? Buy here, calls, buy here, stop loss on your calls, but buy again at that same level, right? And then you take it all the way down, because number one, it broke a demand and it stopped you out, so you're automatically able to switch your position right then and there without no question. So take a small loss, okay, accept it, and enter for a put position. Same size position, guys. Don't get in there trying to revenge trade, trying to make all that money back, because it's going to create a little more emotional imbalance within yourself. But it keeps things very, very simple. Okay. All right. So that's Disney. Now let's talk about Low. Low had an amazing day on Friday. I, for one, did not take full advantage of that, but either way, all those call positions would have been green. So as long as we hold over 201.50 or 202, I'm long on Low. It's holding this nice demand and just showing you on the 4-hour all this accumulation that, you know, rocked all the way to that top of 263. So there's a potential that this thing can just trade sideways in here and give another opportunity and go back into 263. Again, I'm not saying the next 4 days, guys. I'm just saying, speaking in general, the reward here is pretty amazing for something like this, right? So these are the 3 levels that I have. Okay, so I want to buy anywhere between 202 and 200. This is my lowest dip buy that I would personally take, and take profit 207.50, and then 211.75, I guess. If you just want to say 212, that's cool. But on the way up, follow psychological numbers, guys. Okay, don't be afraid to take profit or lock it in, or don't say that, oh, well, the video said it has to hit 211.75 or 211.80. No. Okay, make sure you show your position. Once you go green, you keep it green. Okay, there is no reason why you shouldn't keep your contract green if you're already green. If you're sitting there wondering if you should, you know, keep on holding it, then that's your sign to just simply get out and take profits. Okay. HD is the other one. So this one, it's not a double bottom, but it's just more of a confirmation that if you're going to be looking at low, look for a dip buy right here for HD as well. This thing actually held this 300 here, and this was a previous setup right here that I saw, and I had taken full advantage of this move. And then now it finally broke to the downside and came back inside, reclaiming that 300 and broke this little small intra trend. And then now it's creating this nice bullish engulfing. So if you're going to dip buy anywhere, this ticker, I would say 307 is your lowest right here. Okay, 307 is your lowest to dip buy, because you want 50% of that previous move to actually hold. So it's around that 307, about 50%. Okay. I guess the lowest would be 305, but I would feel more comfortable at 307, just to make this all these wicks make them demand. Okay. But yeah, that's just a quick breakdown on HD. The next one is going to be BA. It looks like the futures are coming down right now too. So who knows? We might gap down. We might see a nice gap down over it. I'm actually in calls on some tickers, so hopefully it's not too bad, right? All right, so the lowest that I want to buy BA is right here. It's 172.60. Okay, so I'm gonna keep it psychologically and do 172.50. That's gonna be my my stop loss. If anything below 172.50, I will not buy calls on BA. But if this thing, for example, does something like this and it breaks all the way down here and then comes back inside here, then this is where I will buy it again. Okay, I'm not going to think twice about buying this specific level, because it's going to be a reclaim of a small demand where somebody had orders placed in the past. So most likely in the future, there's a high probability that it may happen again, whether it comes back down here. So if it does, you have an opportunity to buy it right here at this 163. I would keep alerts right here at like 165. And let this be the lowest dip buy of the week if we do get down there. But I technically do like BA right now where it's at. And again, this market can gap down, can gap up, whatever it wants to do. As of right now, it looks like it's coming down. But we have all night, guys. All right. So remember, I'm just giving you guys dip buy opportunities in the market that have great value. And some of these stocks are looking great to take advantage of that, right? All right, so TTD is the next one. And the reason for this one is that it created a base here. So I want to see, okay, I'll just show you guys all this. I want to see if this actually holds, because now like what you're doing is you're not dropping any further than this 66, okay? If it does, it's going to come down to the 65, but technically I don't want it at the 65 because it did create a base, and what that's going to potentially do is going to be a drop, base, drop, and then this thing will drop further with a bearish market. If we have a bearish market, that's exactly what's going to do. So at 66, I don't want anything lower than that, even though 65 is where the buyers came in at once. At one time in the past, I don't think they'll show up there if this is going to be a drop-based drop pattern. In this case, you guys can graph puts at 66 or 65 and just write it all the way on down to this like 59 or 60, sorry, 60. 60 and 60.85. So that can be a nice move to the downside if you ask me. So set those alerts and make sure you follow this if we have a bearish market, okay? The next two tickers that I like are FDX and UPS, guys. Let me just show you guys the weekly for these, how they make sense. So in the past, this thing had bounced right here in the past at like 197.50, 198 area. So just giving you a heads up as to what it is. Here in the past as well, we kind of created like this double bottom right here if this 199 actually holds, okay? So dropping down to this 4 hour now, the 199 here is where the buyers had showed up in the past, right? So let me just show you how far they came in. From right there all the way to that 199 is where buyers showed up. So can this be considered a triple bottom or a double bottom on the weekly, whatever it is? I do see value in FDX as long as we can hold 199 and 200. That's going to be my buy level. So I'm going to literally buy it at 199 and I'm going to stop out at 198. That simple, okay? Now this thing continues to the top side, then I'm just going to buy it around 203. I think the trade makes sense here, and then over 205 is probably going to create a base and give us a nice move to the top side, right? So we're going to be looking at FTX to do that. And then the next one, we're going to be looking at UPS. All right, so let's check out UPS. But these move a little bit slow, guys, so be careful with the spreads and be patient. Here's our weekly for UPS, okay? And what I want to show you guys here is the accumulation that happened here for UPS, okay? We're kind of inside it right at the bottom. And you guys wondering why I don't grab this, because there's not a lot of structure. This thing just came down and snapped back inside like it was nothing. So if we have a base and a structure, it makes a lot more sense, because that's where the buyers were at in the past, and that is the level that was fought for to create a value, which the value is demand in this case, okay? Hopefully that makes sense. All right, so now that we have that, we have the full understanding of that picture. This is what I'm looking for UPS. It looks like it's coming on down, but on Friday, this thing actually created a bottoming tail. That's what it's called, right? Basically what that is that the buyers came in and they brought it all the way up, giving you a buy signal, right? Basically that somebody is interested in this specific ticker. When somebody is interested in something like this, it means that there's more buying volume than selling pressure. The selling pressure happened here, okay? So it just like automatically dropped it. Boom, and just kept on dropping. And every time the candles started getting smaller and smaller, the red ones got smaller, so buyers started showing up here. They started showing up here. Pre-market, they came in here, they tried, and then they tried again, and then right here, they're just like, we're taking over. So this is a very, very easy play. 190, 130, and 189.75, it's a buy. Because of that, and I want to see something do this. I want to see that, okay? I'm not saying it can happen in the 4 days, right? Anything can happen in 4 days. But that is the purpose and the target for something like this that can get bought up with pressure and trend all the way up. Now, the movement is going to be a little bit slow, guys, and it's a little bit awkward trading UPS and FDX, but the moves and the premiums can be amazing profits when you guys get a good entry. And I'm not saying trade those weekly contracts, guys. Get like next week's contracts, so you can allow this thing to move. If you grab some weeklies, by all means, day trade it on the way up, but use your weekly contracts to pay for that swing. So for example, let's just say you make, let's just say you make $300 and your swing contract costs 250. Technically, you're putting 250 for a stress-free swing, because even if you lose that full contract, which most likely you won't, you'll still be green $50 at the end of the week. Now, some of you guys may think, well, why should I give up that much? Well, the idea and the point here is that you still can day trade and have something stress-free. Now, I'm not saying that you're going to make 300 off a weekly contract and your swing trade is going to cost 250, but I'm just giving you an idea as how something can look and potentially be of great value for you. Okay, so that's UPS and FTX, guys. Please make sure you guys keep those alerts on these. I think they have great value, and even FTX and UPS move a little bit different. Even when the market's red or when the market's bullish, these little dudes have a little more different characteristics and stuff. So watch out for these guys, and take full advantage of a full recovery that can potentially happen. And I'm not saying it's going to go back to all-time highs, but remember that after every huge green candle, there's always a red one, and after every red huge candle, there's always a green one. There's going to be buyers and sellers, guys, and that's what this market is all about. People buying and people selling. If there are more people selling, then there's going to be more red than green. As of currently right now, the futures are coming on down, and it's not looking all that great. But we all do know that that's the head and shoulders pattern, and that's what we talked about in the previous 2 weeks. And I gave you guys the bearish scenario, and I gave you the bullish scenario, and one specific level to focus on last week. Just like I am this week, it's only a couple of levels, and not really expecting much in the next 4 days, right? So please, guys, make sure to be wise. Don't go all in on something that you're not comfortable holding overnight. Make sure to hedge your positions. If you're in calls, grab a put. If you're in puts, grab a call, just to hedge, everything in for you. So trade safe, guys, please, and be responsible. Honestly, follow and respect your stop losses, guys. Please manage that risk accordingly, and don't blow your accounts. If you guys need help, please feel free to message us at Conservative Collectors, and we'll do whatever we can to help you guys out. All right, so also expect a 2K challenge for Conservative Collectors. This will be starting on the 14th, so you guys have more than enough time to actually have this done, and it's gonna be a lot of fun. So yeah, make sure to follow us on Conservative Collectors, follow the Instagram page Conservative Collectors, and hope to see you guys soon. All right, so stay green, and again, if you guys have any questions, please feel free to message us. Have a good one.